We're going to go over two trades that I took this week on dollar CAD. I will do a full analysis of the trades and why I took them. In the meantime, make sure you subscribe to get more videos like this in the future. So, firstly, the trade was taken on 10th of September 2025. Before I took the trade, obviously your general market conditions, you're in an overall uptrend here. You were getting breaks of structure to the upside, higher highs, higher lows, so on and so forth. Pretty obvious. As you can see, once we got up around this area here, price did start to, I suppose, stall. Your higher high wasn't as significant as, for example, you have a high here and a high here. This high just didn't come back up as much. So what that would tell you, even though this is sort of after our trading, what that would tell me is that momentum is slowed down overall in the uptrend, and therefore you would need to be watching your lows for breaks of structure and possible deeper retracement to the low side. But until you get your breaks of structure to the low side, I still had a long bias. So with that being said, what I was looking for is I was looking for long positions being above the moving average. So we'll go on to where I took the trade. Let's see. So you can see here, there's quite a lot of momentum come out of this area here. Okay, quite a lot of momentum. So we'll go to this replay device thing on Trading View. I've been a user of Trading View for about the last probably 10 years. I guess a great tool. So anyway, first off, I actually had a zone not drawn where I have it, but let's see, where's this fucking drawing box tool? I don't use Trading View for analysis, by the way. I would have had a zone drawn in around this bastard, this sort of area here. Okay. Now, what I was thinking is if price comes down to this area, it is actually going to cross below the moving average, so I would need some pretty significant bullish price action, and I probably wouldn't even take it, to be honest. But this was an area of interest I had marked out, and if price did break below this low, then I would have changed my bias to short. So, with that being said, we'll go on to where the trade setup was from. So, again, you had pretty strong bullish momentum coming out of this area here. There was a clear break of structure, broke this high here, and closed above it. You also have sort of what I would call an offset double bottom. I don't know if that's a thing or not, but over 10 plus years of trading chart time, you start to recognize patterns like this, and you call them your own fucking name. So yeah, we have an offset double bottom, and neckline is around this sort of area here, where I'll draw a line on it. Where is it? Neckline around this sort of area here. So what would you be expecting this price to come down, double bottom and break above the neckline, come back and retest the neckline. Sometimes it comes back and retests the neckline like this. Sometimes it does a full sort of swing and comes back and retests the neckline. So anyway, what we had a zone where we got good strong momentum come out of it, and essentially what I was waiting for is price to come back into this zone, and over here it did. So once price come back into this zone, whenever price closes within the zone, I would always be a little bit more careful, and I would actually watch price action. Now as far as I remember, it wasn't like that on my chart. No, I knew that was lower. Yeah, so I would always watch price action, and basically taking a trade that has closed within the zone is more risky than taking a trade that has just wicked into the zone. What I mean by wicked into the zone was, say for example, this red candle here didn't actually close in the zone. The wick just came into the zone, and then it closed back out of the zone, and price shot on it from here. That would be a wee bit less risky. No, well, not that it's risky. It's within my plan, but um, yeah, it's just better to see. But once price closes within the zone, I would always carefully watch price action. I'll go back to my own chart. So as you can see, price closed within the zone here. We'll mark out the zone on this shit. So yeah, price closed within the zone. I was seeing these ray candles here, and I was thinking to myself, okay, this inverted pin bar here, you were getting bullish rejection because price was able to be pushed upwards, as we can see from this long upper wick, but it was brought back down again. Then we got a nice bullish pin bar. Once I seen this bullish pin bar, I thought, okay, that's good bullish rejection from the low side. I'm going to put my order in, and I had a buy order, well, just an instant execution order. Above the break of the pin bar, stop loss was down around here, and my take profit, I think, it wasn't actually that far. I think my take profit could have been up about here somewhere. I'm not one of these people who say, yes, I took profit right at the very, very fucking high, 0.01 pips from the high. They're all fucking full of wank, them deck slicks. So, you said your order, you said your stop, and you said your take profit, and that's it. You see these traders who fucking are in that trade, and then they're like, right, we need to move our stop loss, or we need to move our take profit. Yes, I understand moving your stop loss to break even and trailing it or whatever. I have occasionally done that, but on a second level position or whatever. But these traders who fucking say, oh, I'm just going to move my take profit down a wee bit because I don't think price is going to hit it. Well, if you don't think price is going to hit it, you didn't fucking execute on your trade properly, and you weren't aware of what you were doing. So, yeah, anyway, enough of that. So we've seen this bullish pin bar here. We've also got a sort of a diamond reversal pattern here. Again, I don't actually trade patterns, but I do pay attention to them. Diamond reversal pattern. Let's see if we can get a fucking example of it there up. So let's say price drops down, bam, up, down, up, down, up. So I think that's actually how I would draw it. So a diamond sort of reversal pattern is like that. Maybe that's not. I don't know shit. There's a diamond reversal pattern here, so you can see, from there to there to there. I don't actually even know if this is a thing, but that's or a sideways box reversal pattern, whatever the hell's name you want to call it. You do occasionally see those in the market. All these sort of patterns are worth paying attention to because of their significance. Now you have to pay attention to them in certain areas. Um, there's other patterns I would pay attention to. I would call them a grind sideways pattern. Head and shoulders, inverse head and shoulders, double bottom, double top, things like that. But yeah, enough of the rambling on. We'll go on to the next trade that was on dollar CAD. Let's see. I think it was actually the next day. It was Thursday. So yeah, here it was here. Okay. So what we had seen, I'm not going to use this trading view because it's just symbolics. It's not the same candle. So what we would see whenever we come onto the charts in the morning, we have a pretty strong upward trend here. Higher highs, higher lows. We have pretty obvious breaks of structure to the upside, which is good. Price isn't too far overextended from the moving average, because given that it always get some mean reversion. I don't like to trade whenever price is way extended. What I mean by that is, let's say for example, your moving average is here. Okay, and then let's say for example, prices, fucking hell, prices just dabbling up and down. You're in a bit of a range here. Bob breaks out of the range up. Price is very, very, extended from the moving average up here. Once you get sort of this overall extension from the moving average, what you tend to find is you do get a more significant and deeper pullback. So that's always worth paying attention to. Your best trades, I would always find, are in around sort of these areas here. All right. Okay. With that being said, you're not too far overextended from the moving average. So we were going along. We're thinking, right, we're looking for a buy position. Prices upward trending. We will wait and see if we can get a buy position. So We had some momentum come out of this area, but unfortunately, this momentum did not create a break of structure. What I mean by that is we have a red candle here and a red candle here, so there was a stall before we got a break of structure. That, in my books, does not classify as a momentum break of structure. It is a break of structure, but in my books is what I call a momentum break of structure. It's not a momentum break of structure, therefore I would not classify that as a zone. So this here area is of no significance to me. Now we have another break of structure here, and this did not stall before it broke structure. This would be a minor zone in my opinion, and given that we are at recent highs, I would need pretty significant price action to take a long from this zone. So, with that being said, we did not get any price action. As you can see, it just broke straight through it. Right, so once I seen this, I thought, holy shit, that was pretty unexpected. Price broke and closed below this level of structure here. It actually closed below it. It broke and closed below this level of structure here, and as far as I remember, it broke. Yes, it did. It broke and closed below that level of structure too. So this was a pretty significant move downward, also below the 200. And now what I was thinking to myself is, fuck, we could possibly be looking for shorts. So as time goes on, yes, we have pretty hard downward moves again, and we'll just go on over here. So what I seen here is we have another level of structure here. Price broke and closed below this level of structure, giving us a break of structure that qualifies in my book for trading. All right. So what we were looking for here is I had my zone marked out from the swing high to the low. Now what I had seen from that was, yes, we have a price gap. So that's the number one qualifying factor for a zone. Yes, there was a break of structure, but what I seen was pricing back into the zone. So like I just have recently said, once pricing was back into the zone, I always pay close attention to price action. And I like to see, bullish engulfing, bearish engulfing, 2 hour reversal, pretty good pin bar, sometimes reversal IBs, depending on where we are in the chart, or even continuation IBs. So, given that, or saying that, we got a continuation IB here, or well, it's an inside bar. But continuation IB would normally be on around down here, but we have an inside bar with a bearish pin bar as the inside candle, in case within the Muller candle. So what I had done is my stop was in around this area here. My entry was around here. We were triggered by this candle, and my take profit, as far as I can remember, was down around about here. That my ATR take profit actually coincided with the 261 fib extension, as you can see. So hold on, I see what my take profit was. Take profit 7 on the ATR, and yes, that's right, 7.3 here. So it was rounded down. 14 and yes, that's 13. Was it down around about here? Was it? Yes, that's right. 14. I actually think you rounded it down to 13, possibly. I can't honestly remember. I would need to consult with my Excel spreadsheet. So, given that, that is 2 trades on USDCAD broken down. Why I took them, basically, both of them were based on candlestick patterns and price action from an area of significance. Okay, both trend following. It's always advisable to stay on the side of the trend. I've been trading long enough now to realize that trading counter trend is detrimental over the long term, unless that is basically what you specialize in. I do know. Back in the day, there was a few guys that did specialize in counter trend trading. I never. Well, I did try it actually, and I got wiped a couple of times. But fucking sure, you learn, don't you? So yeah. Hopefully that gives you a bit of an overview as to why I took those 2 trades on USDCAD. So if you want to see more trade breakdowns, just make sure to subscribe. Thanks for watching.